Hey everybody, this is Jim at SP500chart.com. It is July 2nd, 2012. We're going to look at the S&P, but before we do, we got to just remind you that the video and the website are for educational purposes only. Nothing stated at SP500chart.com or in this video is intended to be used as investment advice. I can draw lines on charts, and they can be really interesting, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts. So I did it again. Hold on. I've got this little screen capture program, and I reach over with my mouse and I hit pause so I can bring this up into the frame. And for some reason, it seems like it just ignores my mouse click, so maybe I missed the pause button. But look, guys, here's what we got going on. We had a day of largely kind of sideways, slightly up, at times slightly down. I call that sideways. And we are still over this green line for the second day. And again, this line is drawn over the... did that again. Did that last time. We can see this on the hourly chart, Jim. This line is drawn over the right shoulder of this head and shoulders top, and also drawn over that a high that had been set in mid-June. Today we closed over that high, as evidenced by a close over this black line, and it appears to my eye, tell me if I'm wrong, it looks like we hit this extended red line, momentarily got over it, and then found resistance there, came down and hit the bottom line, climbed up it for a bit, and it looks like the market, at least at the end of the day, it feels to me as if the market is saying, let's go ahead and get on up to this orange level here in the low 1380s. But here's what I would do. I would watch this line. There is a reason why I would expect this to get potentially tagged, and that is the fact that it is a line of resistance that has held the market back on 3 occasions. And since we are now over this level, it just sort of makes sense to me to think that that we may be gearing up for a move up to the low 1380s. Now, we got a couple things that could happen. One is we stay in this channel, and we do just that. We get on up to the 1380s. The other thing that could happen is that, and this is why we need to keep this line right here in mind, if this line were to break, then we would set up a back test that would probably find some support at this green line, especially since we've been over this line for a couple days. Just also, so you know, we have this inverse head and shoulders pattern that gapped up to its target, and we never got a back test on this neckline. So as we look at things where we stand right now, you could make the case that we're a little bit higher than the average of where we would expect resistance and the average of where we would expect support. So in other words, it looks to me like we're about 3/5 of the way up into the range where I would expect the S&P to be trading. Now, if we do get a solid bounce on this green line, and it would be a meaningful reversal, then we're about halfway. But does that make sense? It's like I'm expecting resistance here. I would expect some support here. But the next place where I would really say we should get support would be significantly lower than where we're trading. There's this little area right here that is kind of between the low 1330s and roughly high 1340s, 1350. You got this little area here where there's not a whole bunch of, well, it's a gap. And if we were to get into that gap, then more than likely I would expect the market to sell back down until we find gap support. Okay, now I'm not a big believer that gaps have to be filled, but what happens is they often are, and when they do get filled, you often find either gap resistance or gap support. Case in point, right here, we had a gap down. The market rallied back. Once it got to about that level, it sold off again. That would have been gap resistance. If the market were to sell back down to roughly the 1330s, low 1330s, or let's say the neckline of this inverse head and shoulders, I would expect support there. Because at that point, the people who failed to be long when we had that big gap up day, those people would likely say, here's my chance to get back in, and the market should reverse at that area. But I think we got a reason to expect some support at this green line. But for now, I'm keeping my eye on this little red channel. We were underneath that channel for a grand total of one very ugly day. Then we came right back to it as if nothing had happened. How interesting is that? So we were in this channel for 3 days, one day well below it. Then the past 2 days, we're back in this skinny little channel. Now that is skinny. I wouldn't expect it to last for very long because there just isn't enough wiggle room in this channel for any kind of short-term correction to take place or short-term counter move to this channel. So with that in mind, just kind of thinking ahead a bit, let's create a parallel line here. Just stick it there, just for jollies, just in case we end up that this is a larger channel and this is just a portion of it. So let's say we break this channel tomorrow and we sell back down for a day and a half, and we bounce on this green line. Well, it could be that also could correspond with this parallel lower channel, and I'm basing this on the lows that we had back on the 28th. That's just a little speculative, and since it's speculative, I'm going to make this a very dim color. But right now, I think that's pretty clear. I'm losing my voice. I just was speaking with somebody on the phone for about an hour, and I'm about worn out. If the market were to get up to 1380 or the low 1380s, I would expect it to get turned back up there. And if it does get turned back and we start to sell down, if you look at what's taken place over the last few weeks, you can see we've got this top orange line and we've got this bottom orange line. So if we tag this top orange line, let's see if maybe we were to come back down and tag this bottom one. Kind of makes sense to me. And as this develops, we'll be taking, if we do get a reversal up here in the low 1380s, then I'll start to look at kind of what might be going on in this pattern. But for now, kind of as we pointed out in the weekend update, we have a cluster of resistance up here, anywhere from the low to mid 1380s up to the 1390s. And then I think we've got expected support at that kind of makes this conjunction here around 1340. So you can see what I'm doing. We got this line, we got our neckline, we have this rising line. All of this has a conjunction here, and then we've got all kinds of resistance lines that have their conjunction here. So, hey, who knows? Maybe we power on up to this area, and then we sell off quickly down here. And if so, if we have signs of a bounce, then, hey, I'd buy it, and I would look for another go up over a 1400. But, guys, we just got to keep an eye on it. And for right now, for the short term, this little channel is probably going to help us out in keeping an eye on what happens in the very near term. So look, I hope that seems pretty clear. It's again, we are in some fairly volatile times, and what's a good way to put it? I'm still got lots of cash. I'm long, and my stuff's doing pretty well, but I'm still kind of in a wait-see attitude with the market overall, because we're getting up close to this neckline area up here in the high 1380s, low 1390s, and I would hate to be caught off guard there. But the good news is we did close over that June 19th high, and it looks like the market wants to best that by a bit more before I would expect to see it turn back down. So look, again, thanks for watching the video. Thanks for putting up with some of my ramblings. Take care.